China and the 2025 outlook. So I wanted to tell you about the Trade Summit. Registration is opening for the Trade Summit, I believe, next week or soon. This is a great opportunity for you to network and do business. It's going to be August 5th and 6th in 2025 in Lake Buena Vista, Florida at Disney World. It's a great opportunity we've got about 800 attendees, more than 800 actually, 118 exhibit booths. So it's a great time to do business with global people from all over the world. So early registration is happening. So if you can register for that early, you'll get a discounted rate. So we hope you'll do that and hope to see you there. All right. Now I would like to introduce our panelists. We have with us David Lee, who is the marketing director for SPM Biosciences. He's also the author of AgriBusiness Global China Price Index and an ABG advisory board member. He participates in speaking in our live events and also webinars. So welcome, David.
Thank you, Erin.
Then we have Derek Elephant, who is a founding partner and senior crop protection analyst at AgBioInvestor. He has 20 years experience in crop protection market analysis, and he contributes a crop protection report article for every ABG Direct issue. So welcome, Derek.
Thank you. Hi, everyone.
So, all right, David, we want to start with you. So I keep hearing this talk. I've been hearing this talk about this question I'm going to ask you for the last several months, and I'm not getting the truth. So I'm asking you for the truth here, David. So is the Chinese government subsidizing Chinese crop protection companies? And is this how they're able to offer low prices and stay in business? What's your take on that?
Thank you, Rini. I think thank you for the tough questions. First, for me, I think it's a very difficult to answer. Actually, if we go back to the history of the Chinese agrochemical pricing, during the last 20 years, we have experienced at least 3 times of the low pricing in our history. The first shall be the 2008 to 2012. Another one is from 2014 to 2017, and 2018 to 2020. And right now, we are experiencing another round of the low pricing. Actually, let's figure out that what's the reason caused this kind of low pricing. I think it is always related to the low pricing of the agricultural commodities. And when farmers are facing some low income in future, they have low anticipations about future incomes, and they hesitate to pay for the agrochemicals. And moreover, that is really related to the macroeconomic cycles. We will see that it's a downturning of cycles. Right now, everyone is facing very tough situations. Actually, when the economy is going down, and farmers hesitate to pay, and multinationals and distributors have to achieve their sales goals in what they can do. Actually, I experienced these kind of situations around 10 years ago, in 2012. At that time, I worked for Biosciences inside China. We have to push over cargoes into the channels, so we have to capture the cash flow from distributors, not only inside of China but also for Latin Americas. So if you review the history of the multinational companies in the distributors, like in the US, most of them have very good sales during the past 3 years, especially during the COVID-19. So recently, I think it's a very very common result. If we think about the cause and the effect, currently the demand and the supply, the balance of demand and supply, really decide of the pricing. So not only for Chinese suppliers want to quote a lower price, they want to enjoy a higher margin. Everyone who are doing their business, they want to have a good profit, right? And the second thing is how do they make the pricing decisions in the market? So sometimes someone may think that they calculate the cost, production cost, and the labor cost, the raw material cost, financing cost. But actually, during this kind of high competition in China's supply market, most of them have to gather their market price and go back to their plant and after their R&D teams to do the optimization of the process and to try their best to make the cost lower than the market. And someone who have competitiveness, they can achieve the 20% is a good thing, and someone cannot do that good, so they can only enjoy the 5%. So they gradually they have to go out of the supply market. So I think that if you say that the subsidy from Chinese government, I think from my experience that only the VAT refund uh, coming from the Chinese government, they support the export about local products go overseas. But most of the VAT refunds was enjoying by distributors in the multinational companies. Actually, was enjoyed by the buyers. We if one supplier give the VAT refund back to the buyers, everyone have to follow. So all that they do not have any advantages on the market when they call the price. So and when I work for like a Mitsubishi Corporation, the top leading Japanese companies, trading companies, they can have the tax refund from Japanese government for any cents they pay for Chinese tax. So it's really common about the this kind of a subsidy in the global market when you do the trading business. And I think the low pricing is just a result, and no one want to only the high advantages of the suppliers, and they can survive in future.
Okay. So just talking about thank you first of all for answering that question and thoroughly and giving me kind of a better understanding of what's happening because I hadn't had that perspective before. So thank you, David, for that. My follow-up question is, with the low prices coming from Chinese crop protection companies, it sounds like it's kind of upsetting the global crop protection industry, or at least that's what I'm hearing. And Derek will hear from you in a minute about that as well to see, what you think about that. But what is 2025 going to look like for China? Are they going to be able to, these companies going to be able to keep going at these low prices, or what's your take on that, David?
Well, for this question, I can just make it straight that I disagree about the upset, the Chinese pricing upset the global crop protection industry because of as I know that when I reach any suppliers from China, everyone told me that they want to protect the market value. So they do not want to disturb the global market. And when they go to the market, like Biosciences said, their brand products like high level portfolios, and Corteva have high level portfolios in their segmentations. But the Chinese want to provide the generics. Sometimes they set their segmentations in middle class or low classification. So everyone want to protect this kind of market, and moreover, Chinese suppliers give the same price to multinational companies and to FBN or to the national distributors. And what we are seeing that in U.S. market, FBN want to kick off the channel, make it flat, and always call it the lower price. But for Chinese, when they cooperate with the distributors, the basic principle they want to protect the market value. So I do not think the Chinese intend to upset the global corporate protection market industry. But truly, the multinational companies who have the brand products is really facing very big competition from Chinese suppliers because of low cost of the production and low cost of the active ingredient. But sometimes, the Chinese also the suppliers for multinationals, like a prosaconazole, like a glufosinate, and most of the common products of Chinese supply to the multinationals as well. So sometimes I think the multinationals or distributors have advantages to manage their channel margins by their hand. And if you say that what next year will looks like, I think the competition will become very strongly. If the tariffs happens in U.S. market and everyone want to think about the Latin American market could be their key market in future. So the Chinese companies have to go there and to compete to have the market share as much as they can. I cannot deny that there are some people who quote the lower price, and that also means the lower quality sometimes. So I still remember that I talked with the Argentina's distributors. They always complain that why Chinese just provide the garbage um, quality products to them. I asked the question to them by reverse. I said that how much you paid. Sometimes you if you do sourcing, if you really the penny picture and you very greedy on the margins, so you cannot have very good products from China. And the Chinese have to save the money, to make the margin to keep their profit. So another thing that I think the active ingredients could be very flat in next year. That's because of it, the global channel becoming more flat, and some entrepreneurs from the distribution or from a wholesaler or brokers, they want to create their own business and to reach to Chinese manufacturers directly. They do not have any facility for formulation, but Chinese formulations can currently I experienced have very good quality. So it is very easy for them to source formulations into their final products and just put the label or their brand, to distribute in their sales channels. So sometimes I think the make business happen quite easier in next year, and that's we call that competition really happens, between the Chinese products and the multinational or these national distributors. And moreover, I think we need to think about more, consider more about the Chinese integrations about their supply. And most of the supply will gather into the big companies and who really have the advantages. Like if we source from Lear, we source from Xinfa, or we source from Fuhua, no big issues on quality control. Sometimes we can feel relaxed. But the Chinese, there's one weakness about Chinese suppliers. They could not provide the very sufficient services to the distributors or to the farmers directly. And some insurance coverage, they cannot have this kind of experience before. And what they can do is just provide good quality of products and to the distributors. I can support you about the supply side. So this is the weakness. So Chinese manufacturers are really focused on the manufacturing. Most of them reluctant to invest on the global registrations. They want to support the distributors. So this is what my rough idea about 2025.
Okay. All right. That's good. All right. Well, Derek, I want to kind of turn it over to you for the next question. Can you give me an overview of how, from your perspective, how China will be affecting the markets of Southeast Asia, Brazil, India, and the US in 2025?
Sure, yeah. So maybe I'll just give a bit more background as well on the pricing situation, because as David said, it's not as simple as Chinese producers cut their prices and the global crop protection market collapses, because there's a lot more nuance to that, and a lot of it really is coming from the issues around the pandemic and immediately post-pandemic, when we had a lot of shortages in the market. We had a lot of factories that couldn't produce, but we also had a lot of growers who wanted to pre-buy a lot of product to make sure that they didn't, their supplies didn't run out on farm or at retail during the growing season. And it was actually quite hard to source product at this time. If we think back to the pandemic, a lot of that was driven by, as much more competition for containers, for example, as purchasing moved away from services to goods. We had obviously factories and logistics were affected by lockdowns as well. So product supply was very tight globally. And obviously with China being responsible for about 60% of the world's agrochemicals, then obviously agrochemicals took a big hit in that. But, it wasn't really the one particular issue that caused it. It was weather related as well, because all of this product that had been pre-bought couldn't be used where the weather wasn't conducive to it. So I would say as we move into 2025, China prices obviously are low and have been very low for a period. But some of the issues that we're seeing now is also prices for European produced material is declining as well, whereas before that had been held at quite high levels due to high costs of production, etc. But now we're seeing European prices actually start to come down as well. I think for Chinese prices, we're actually seeing a bit of a leveling off now. Not the same decline, but still quite low levels. And a lot of that obviously coming from, huge investment and production capabilities in China. And also just the alleviation and the ending of all of the lockdown restrictions and logistics and product supply now becoming much more normal. Now, the biggest regions that are, reliant on Chinese material obviously would be the sort of worst affected by the price situation. And I think Southeast Asia obviously is very heavily reliant on Chinese material. There's very sort of big generic markets there. They have a lot of plantations and other type of crops that you want to, produce at very low cost. So the margins are quite tight. So the pricing actually has a bit of an issue for Southeast Asia in terms of the market value. But, China's only one part of the global situation. And I think for these countries, not just South Asia, but other, fast developing markets, I would say, where agricultural technification is starting to ramp up. And a lot of that is coming from the issues that we had around the pandemic, where labour supply was very tight, product supply was tight, and local food security was a big issue. So what countries really wanted to do is maximise yields, but they didn't have the, necessarily the manpower or the products to do that. So what we're seeing now is, a big drive to increase yields, and a lot of that is adopted technification. And we're seeing that in a lot of, quite low value markets, but ones that are expanding rapidly. And part of it is also, related to registration as well. So there's, for example, in the EU, there is moving towards a zero limit, maximum residue limit for products that are not authorised for use in the EU in cultivation. So what that effectively means is if the EU want to export produce to the EU, you have to only use crop protection products that are approved for use in the EU. So what that means is a lot of countries with a big focus on export to the EU, which is obviously a huge market for the export of fruit and vegetables in particular. That means you have to really abide by the EU registration system to avoid these MRL issues. And this drives value in the market as well, because a lot of these older products that come off regulation are quite low cost. So we're seeing in developing markets, they are really ramping up from, product choice, increased technification in terms of adoption of improved agronomic practices as well. So there's a lot of growth coming in markets, and I would include Southeast Asian markets in that as well, but also, some of the smaller ones in Central and South America and also Africa as well to some extent. So for 2025, yes, prices are still low, but for Southeast Asia, we'd actually expect improved weather based on the return of El Nino. And also, as I said, this increased technification in a lot of these markets. For Brazil, what we have seen in Brazil in recent years is a big switch from China away from the US and towards Brazil for commodity supplies, particularly maize and soybean. And we've seen, Brazilian growers have been increasing their maize and soybean areas basically year on year, except for maybe an interruption recently, just due to weather conditions, really. But we have seen maize and soybean areas continue to increase. And a lot of that is driven by China's requirement to move away from the US as a key supplier of maize and soybeans in particular and start to focus on Brazil. But this has really driven quite a lot of opportunity and growth in the Brazilian market. And I think that will continue into 2025. In fact, I expect improved weather in 2025 as well compared to what we had before. So, quite a positive year. We've seen China and Brazil invest in a lot of the logistical and transport issues that Brazil had. that was one of the key barriers between, Brazil exporting much more produce and than the US. What they had to do was improve their logistical and transportation infrastructures, and they've actually been doing that in the last few years as well. We're also seeing in Brazil, a lot of issues around resistance development for certain diseases and weeds, etc. So we're having to see a bigger mix of different products being applied, and all of that is newer technologies. We're seeing a big adoption of biologicals as well, which is coming from the need for integrated pest management for resistance control, but also, a much more streamlined regulatory process for biologicals in Brazil, which has really helped drive the market there compared to sort of other markets such as the EU. So Brazil, I would say, looking very positive, and a lot of that's coming from, prices from China are low, but we're seeing continued investment in agriculture in Brazil and how that can drive, exports of commodities to countries like China. For India, now India is sort of one of the next leading exporter of agrochemical products after China. So one of the issues that India has is obviously it's competing with a lot of the similar Chinese material in the global market. So these low prices are putting a lot of pressure on Indian manufacturers as well. One of the issues that the Indian manufacturers have is they're not as strongly backward integrated as the Chinese companies in most cases. So a lot of Indian companies are still heavily reliant on Chinese companies to provide them with intermediates before they can produce the finished agrochemical. So we don't have the same levels of backward integration. So it's actually a bit of an issue for Indian companies in terms of product supply and sourcing, and also pricing as well. So, Indian producers, it might be a difficult year in 2025, but the actual market itself, in India, I think will improve from the prior years. We're getting much better weather conditions. And we're also seeing in India as well, some of the similar issues around regulation, where a lot of older products are coming out of the market, and in most cases, these are normally replaced by higher cost, newer technologies. For the US in 2025, I think one of the biggest issues is, they've sort of slipped away as a key supplier for maize and soybean to China, and this is having a big effect on farmer incomes because obviously they have less export opportunity for maize and soybeans, and it's leading to a big buildup of these supplies in the country of maize and soybean. And this is really depressing the commodity price for these key sort of US produced crops. So farmers are having to, they're getting less money in, and they're also seeing the effects of the low prices, the high inventories as well. And they've also, it looks like with the Trump administration, there's going to be no sort of thawing of these trade relations with China. So I wouldn't expect, China to then suddenly say, okay, let's get more maize and soybeans from the US now. I think that's unlikely. And I think, it's a big issue for US growers that there is now less outlets for their maize and soybean, having a big effect on price and therefore a big effect on grower incomes as well. And obviously if the farmer has, less money to pay for crop inputs, then he just buys less crop input products. He'll maybe shift down his technologies, or he'll use less sprays, but it definitely has an impact on the market. And, I can't see it really being alleviated anytime soon. So, 2025, I think, could be another difficult year for US growers. We have seen the amount of financial support they receive from the government declining as well in recent years. So, during and immediately post-pandemic, we got quite a lot of support, and there's been a few weather issues as well where support has been forthcoming. But in the last sort of few months of the Biden administration, this support wasn't really there. So growers didn't have the income coming from government support and the lower commodity prices as well. So I think, the 2025 season for the US is going to be quite a difficult situation, and a lot of it coming from, farmers just don't have enough money to do what they want to do.
Okay, great. Thank you. Thank you. You mentioned Trump, and so David, I wanted to ask you kind of a follow-up question about now that President Trump will be in 2025 over the U.S. Is China, the people that you're talking to in Chinese businesses, are they concerned about the enforcement of tariffs, and what do you think of the 2025 strategies of these companies will be to overcome added costs of doing business in the U.S.?
Yeah, Trump administration is very hot topic in China agrochemical industry. Actually, for whole Chinese, we love to see what happens in U.S. We watching the news and talking about the Elon Musk, how they to manage the government to make it more efficient. Looks like a case study for Chinese, how to make our companies more efficient than before. So it's a good case study. But for the um, tariffs, is bad news for us. Because of the most of the Chinese want to get into the U.S. market, but it really depends on what kind of legislation of Trump administration will make the process of the adding the additional tariffs to Chinese products. But from my understanding, that we anticipate this kind of thing, more tariffs will happen in the second half of the 2025, and maybe the earliest will be the third quarter or the fourth quarter. So we still have the window to supply to U.S. market in the first half of the 2025. And some companies are thinking about that, how to manage to meet this kind of window to supply more cargoes into U.S. market. And actually, not most of the Chinese manufacturers are looking at the U.S. market as the top priority. They think about Latin America as top priority because of the geopolitics issues and there's against between China and the U.S. Actually, from my understanding, China and the U.S. are loving each other. Sometimes they are fighting. So like a couple, sometimes they fight each other and they love each other. And from my understanding, that maybe it will be have the beneficiary to U.S. facilities, like a BSF have facilities in U.S. and Bayer also have the glyphosate production facility in the U.S. And they will enjoy these kind of issues, and if they can have their raw materials supply from locally. And it's for generic companies like Adama, like UPL, New Farm. It really depends on where the supply chain located right now. Sometimes they produce formulations from Colombia or Central Americas, and they could have the opportunities to survive. But if they import some key products from China to U.S. market, it could be a big issue for them. For Chinese companies, I have already heard that some companies want to give up about the U.S. market. They do not have any intention to go deeply into U.S. market. And not directly, but maybe from the third country or Asian countries like Indonesia. Like Herman just built a glyphosate facility in Indonesia. But I think the Trump administration is very smart from the news, like they are aiming on the Chinese products coming from China, and also aiming on the products coming from Asian countries and Mexico. This is some countries around the U.S. and who have the investment from Chinese. So I think it's a very smart decision, But from my understanding, like Chinese always be long-term optimistic and short-term pessimistic. We are always thinking about this way. And we think that there's still some possibilities, for future. And the good thing is the Chinese agrochemical industry reacts to this kind of globalization very slowly, not like the new energy track or some electric cars industry. Currently, they have already go aboard. And Chinese agrochemical companies, they are lack of the talent and expertise how to manage the global supply chain. So it's a good result for them just to react slowly. And right now we are facing a big new problem about the additional tariffs. And I think it is the Chinese manufacturer need to change their strategies for go abroad. And sometimes they invest on Indonesia as top priority, and or some go for Mexico for formulations. But in the future, this kind of thing could be changed, for some time, for some term. And moreover, I think it's a good thing for India, for the India suppliers, so they can make it more market share to supply to U.S. companies like FMC. But most of the some of the intermediates coming from China. And as I heard that Chinese government is thinking about that to cancel the VAT refund for intermediates. It will increase a little bit for in India companies to produce active ingredients as that's a step. But I think it's still a good opportunity for India companies. They can have a good chance to go deeply into the U.S. market. And moreover, that we think that the U.S. will face some inflations again, because of the shortage of the supply. Like India have the capacities limitations, and China have huge capacities right now. But even though the low price, even though they have big capacity right now, currently we are seeing that there's only 20% operation rate for the most of capacities. So we think for long term, there will be the rational investment will trigger the gradual clearing of poor quality asset, but it will grow gradually. So some in future you will see that some companies give up some production and they switch their strategy on portfolios to near all patent active ingredients in future. And so this is a big affection for the global supply chain. It looks like isolation. The U.S. market isolated from global crop protection industry. So I think that in Europe or Australia, Latin America, the competition will become more fierce than before.
Okay, great. Thank you so much, David. I just have one follow-up question for you on that. And then, Derek, I've got several questions for you. So what's your advice for people wanting to do business with China in 2025? And, I guess what's your advice for companies also wanting just to survive 2025 in general? You'd like to talk about?
Well, actually, if you think about it from the global competition, on the global crop protection industry, currently we are seeing that the competition starting from the supply chain side from upstream, and at the same time, there's a competition from the marketing team. So for a long term, I suggest to a lot of companies to bring your marketing team and sales team together with your supply chain team to visit Chinese suppliers to let them know what you really want. So I think the capacity will be not very big issue because we are currently seeing that the government and the companies in this free market they feel very cautious about investment on new capacities. So it will be optimized in coming few years. And the second thing that sometimes you have to go together with Chinese suppliers together. I suggest this suggestion to one multinational company's leaders that actually the landscape of China supply it depends on you. So you cannot just make decisions based on current landscape. Like Biocrop Science Tier 1 suppliers, Liaoning Zhonghui currently they invest a lot on their capacities and they can support more to Biocrop Science inside of China. So sometimes when you choose key suppliers in future and they can support you and growth together with you, that will build a lot of loyalty together with your supply chain. So this is for Chinese supply side. But for the sourcing team, I think the sourcing strategy need to be reviewed, need to be updated, according to the marketing strategies as well. And the brand, if you have the brand in the generic, sometimes you need to think about the third party alliance together, to cooperate and compete with Chinese suppliers at the same time. So it's very difficult to manage. from my understanding. And moreover, that low pricing and low quality products will be phased out from the market in future. And we will see that high quality and good pricing products will occupy the whole market in future. And we are thinking about the landscape of competition will change a lot.
Okay, great. Um, Derek, I wanted to you kind of talked about what regions do you think are going to do well and not in 2025. What companies do you think are set up to succeed in 2025 and why? And what kind of strategies do you think companies need to think about in 2025?
Yeah, what I would say is, in the crop protection industry in general, what you tend to have is, when there's a down year, when, for example, commodity prices are low, maybe farmers don't have a lot of money. What you tend to see is, there's a bit of a switch in the market towards the more generic side. So this is a lower cost product. So you would see companies such as Adama and UPL performing well, and all the Chinese companies as well. And you'd maybe see the multinational R&D driven companies, not performing quite as well as these guys when it's a low market. And that's the sort of situation that we've had in the last year or so. And obviously, it's not been as positive for the generic guys, but that's mainly due to the price. So I'd say for what we're looking at is, there is the low commodity price situation that we're in right now. And as I said, this tends to move growers more towards the generic companies in the generic side of the market, and away from the ones that are, much more R&D focused, and the big multinational ones. And that's typically what we see in a down year, and an up year is the reverse, where the R&D companies tend to perform better. And that's been the sort of general market trends over the last 10 to 15 years. But for 2025, what we're actually, what I would expect is what we have seen in the last year or two is quite a lot of new product introductions that have the potential to, significantly alter the market in some parts. So this is in conventional crop protection terms. We're looking at new chemistries coming through. We're looking at new mode of action herbicides, which is the first time for, decades that we have new MOA herbicides coming through, which is obviously massive for resistance management. We're also seeing new fungicides coming through that can be resistance breakers for issues such as Septoria in Europe or Asian rust in Brazil. So, there's always a place in the market for new products. And I think it's becoming increasingly relevant now. And I think this will be the trend in 2025, that these new products can take market share from the older ones because, they're developed. Typically now, these products have developed to be much more sort of sustainable and usable, lower use rates than products that we've seen before. So this benefits volume reduction targets that have been set in a lot of different countries. It also benefits resistance management, as I talked about. So, I think there's a lot of growth opportunity for these type of products from the R&D companies in 2025. So despite it being, still quite a low market, I think, the new products could push these companies up to what would typically be a typical down year. Obviously, globally, and for all the companies in the industry, we've seen sort of inventory situation start to clear up. So we had, a huge buildup in product inventory in a lot of regions in the last 18 to 24 months, and a lot of that coming from the post-pandemic issues that I talked about before. And what this meant is it was very hard for companies who looked to supply agrochemicals into the first step of the chain to, achieve momentum in this market. So we've seen company results for all of the companies being very negative for a period. But a lot of that was down to the inventory situation, where there was a lot of inventory on farm, at retail, and distribution as well. And suppliers were finding it hard to move the product through the channel. But I think we're starting to see that ease up, particularly in Europe and North America now. So I don't think, the companies will be particularly impacted by the inventories in these regions. Maybe in Asia, where the weather has been quite poor in the last couple of years, it might still be an issue. But I'd say, that's something else to be aware of. And something that I sort of touched on as well is, for companies that have a sort of stronger levels of backwards integration in the manufacture of active ingredients, I think these companies will be better placed in the market as we move forward as well. So they'll have, relatively lower costs. They won't have the same margins being applied. If they can backwards integrate from the source material rather than purchase it in from third parties, then obviously they're at a very big sort of price and margin advantage. So I think companies with strong backward integration will do well as well at the expense of ones who are, much more reliant on third-party supply for intermediates. We've seen, production bases in Europe and the US being impacted by very, very high production costs recently, and BASF actually closing its glufosinate plants in Europe, increased competition from generics, the use of alternatives as well, but also very high energy and raw material costs. So I think the stronger you can be backward integrated, the much more advantageous it is sort of moving forward. And I would also say something for companies in 2025 as well. I think, an important strategy, and one that all of the main companies in the industry are very aware of now, is, to be involved in the biologicals market for biological crop protection or for biological crop stimulation or nutrition. I think that's quite an important part of the market now as well, as we've seen, regulation, resistance management, IPM programs, all of these factors pushing the market towards a much more sustainable and, in some cases, biofocus as well. And we've seen in Brazil where, they've streamlined the acceptance process for biologicals, where it's much easier to register now. And there's been a massive explosion in use of biological products in the country, not just due to regulation, but, that's been the sort of cock that's unplugged that's allowed all these companies to start moving into these sectors. We've seen the EU try to put in moves to streamline the regulation process for biologicals as well, and the US as well, and other markets. So I think, if you have involvement in biologicals, I think that's a strong position to be in 2025 as well.
Great, thank you. I'm going to switch over now to, we've got some questions from our audience. So I'm going to start with the first one. It's from Sid. The question is, and I'm not sure who wants to take it, so just let me know if you want to take it. What happens to China exports to U.S. with Trump coming in? And we talked a little bit about, what was going to happen with the tariffs, but I don't know if anybody, David, if you want to talk a little bit more about that.
Yeah, I think there's one more thing we need to consider, that we really expected sometime the tariffs will happen, and maybe before that the U.S. distributors and some generic companies need to purchase from China in advance. So the decision of the purchasing next year could be made a little bit earlier, and that will be a very tough issue for anyone, because of the Latin American demand will coming through from the after spring of next year. So we think that sometimes happens in last year that some Latin American purchasers delay their decisions, and they wait for the lower pricing, and finally they find out they cannot have the cargo in time sometimes. So we need to monitor the inventories from our suppliers inside of China to make a decision at right timing. So it's really need to you to consider about the timing of the purchasing, and to monitor what kind of reactions about other players in the market. Yeah.
Great, thank you.
Something else I would just maybe touch on with the Trump administration. It's not really related to tariffs, but I think, there is the potential that, within the country itself, there could be a big impact to growers moving forward, because the newly appointed head of the FDA has actually said that, he wants to eliminate the use of pesticides, which is obviously a highly ambitious target. But he has a lot of ideas about, making US food safe and healthy again. And one of these is he wants to weaponize, that's a quote, he wants to weaponize regulatory agencies in the country to eliminate the use of pesticides. So I think there's a big threat from within the Trump administration as well. And, if they try to implement very ambitious volume reduction targets, for example, I think that's quite a big threat to US growers as well.
Great.
Yeah, one more thing that I think I can say that like US and China, both sides give themselves more leverage before negotiating. that we will not have any war in the future. We want to have the negotiating in the China shall be ready to purchase from the soybeans from U.S. farmers, and in future, I think it's a can be a tool that to leverage the Trump's decisions in future. So it's let's see what happens.
Yeah, so we're all very excited to see what happens, and we're all watching. So, all right, I'm going to ask this other question, and I think this could go to, I think, Derek, maybe you first, and then David, if you've got anything to add to it. Can you talk on the life cycle of patented molecules? When do we actually see competition coming in U.S. markets, mainly for Renexipar, as FMC doesn't expect material competition in the U.S. market?
Yeah, I think obviously for every product is different. The patented lifespan of a molecule can vary quite a bit. But when we typically look at for the expiration of a composition of matter patent, we tend to use a sort of rough rule, which is the patent will expire around approximately 15 years after the product's introduced. So the patent will last for 25 years, but 10 years of that is spent in development and registration and early, build-up of the product until it's launched. So we typically would say 15 years after a product's introduced into a market is when the patents will start to expire. But obviously that can vary, on a region-by-region basis. I think one of the biggest factors for FMC where they don't expect sort of generic competition for Rynaxypyr in the US is the number of supply agreements that they've got in place with it. So they will supply Rynaxypyr to Corteva, they will supply it to Syngenta. I think it's protected in the US more by these agreements rather than, the patent itself. So I think off the top of my head, I don't know when the patent expires, but imagine it would be within the next 2 to 3 years maximum. But I think what FMC has done is put in place, a good production and supply process, including in India with UPL. And they've also, put in place a number of agreements and stipulations that they will be the supplier of Rynaxypyr to, for example, Corteva and Syngenta. So, that's a very big proportion of the US market. I think, David will probably be able to talk more on it, but, there is obviously Chinese and Indian companies manufacturing Rynaxypyr now who will be looking to penetrate the US market. I think one of the, there's been quite a significant decision by the FTC in the US recently where they've imposed countervailing duties on 2,4-D that's been coming in from India and China as a sort of anti-dumping measure. So I think what that signifies is that, the US are ready to put measures in place if, generic materials imported into the US in vast quantities such that it would impact the price or market share for the locally based companies, I would say. So with 2,4-D, they're protecting Corteva's position by adding significant tariffs to the Indian and Chinese material. And, they could take a similar position with Rynaxypyr if Indian and Chinese generic material starts to come into the market as well, as that FMC could have the argument this is impacting their price, and then countervailing duties could potentially be imposed on that. But I think, I would say the product is protected more by FMC's strategies that it's put in place rather than by the actual patents themselves.
David, do you have anything you want to add to that, or is that?
Yeah, I totally agree with Derek. Rynaxypyr, this kind of active ingredient contributes more than 60% of the sales volume, sales amount to the FMC. I think the FMC will protect their key market in US very strongly. I think it's very strategic product for them. From Chinese suppliers, I think these products have already been dyed, because of the huge capacities announced, so-called huge capacities into the market. But the meaning there will be only 3 to 4 suppliers in future, and below 1,000 metric ton suppliers, they will not start their operations in future and only have the registrations. And I think this kind of a pricing, you can track the history in China market is decreasing steadily. So based on the huge capacities and not that much demand, from overseas. And I think some key suppliers inside of China, they because of the lack of the financial support, they lose good opportunities to go overseas, and most of them want to support from to the generic companies to get into the U.S. market. And for Chinese suppliers, not very aggressive to resist by themselves in future in especially for U.S. market. So I do not think that it will happen very soon about it's very fierce competition in U.S. market.
Okay. Thank you. The next question we have from our audience is, do you see any signs of overcapacity in China? And how do you see this evolving in the next years from the perspective of the government and of the individual companies?
Well, it's everyone talk about the overcapacity, even Chinese. We talk about overcapacities by over internal meetings as well, and we think that the competition, if we say that it's a free market, everyone can launch the capacities by themselves, even it is illegal, right? So in future, I think most of the companies will think about that if they really have a competitiveness about some portfolios production, like a process optimization or R&D side, if they really have the competitiveness or upstream resources. As someone want to launch one product, they have launched the upstream intermediates by themselves as well. Because in China, we are not the contract. We do not have very deep contract spirit. Inside of the Chinese supply chain side, we are the relationship society. So sometimes you can suddenly find out that your suppliers of upstream have already been purchased by your competitors. That happens. So based on this kind of a huge investment, I think in future the overcapacity will be finished, but not very soon, because of the government want to also protect the career some companies to hire some people to not let them lose their job. So I think it will take a little bit longer. And but for most of the products, I think the integration will be happening. But the companies will not die, by themselves, because every Chinese think about that. Oh, I'm the top gun, on these products, and so I can survive and I can beat for the others. So it is always happens, and but the fact will teach them, sometimes they need to give up on some projects and get out of the poor quality asset very soon, and to invest on new tracks in future.
Great, thank you. Derek, I got a question for you. What concerns do you have for the crop protection market? I mean, I think some AgBuy investor stats showed that the next 3 years were going to be kind of tough for the market. Do you have any concerns that you can talk about or do you see any hope for this market?
Yes, I mean, the market is historically very cyclical in nature, and right now we're obviously in a bit of a down cycle. But I think, the fundamentals are still in place that can drive the market forward. So, for example, we still need to produce food. We still need to produce animal feed. What we're also now producing much more than before is biofuel as well. So there is now new streams for crop production that has to be satisfied as well. So, the fundamentals of increasing food feed, biofuel use is still there. What we have seen, as I touched on before, is an environment of very low commodity prices and low farm incomes, high inventories, low prices. But I think, a lot of this is cyclical in nature. So the inventories are starting to wear down. We're starting to see pricing normalize as well. Still quite low, but, it's not getting worse. And what we're seeing is, the climate itself is becoming much more volatile. And what that means is, this could have big impacts on crop production. If you have an impact of crop production, conversely, that's actually quite positive for farmers the next again year because the prices of the commodities goes up because there was less production in that particular year. So a year of low production is actually good the following year for farmers because the price of the commodities tends to go up based on lower availability and supply. So I think all of the fundamentals are still in place, but it's just a very difficult period. And David talked about previous points in history in the last 25 to 30 years where we were almost in a similar situation with pricing, etc. And from that, the years immediately after that, when it started to settle down again, and for example, 2008 in the financial crisis, there was a huge impact to the market. But the following year, it was much more positive. So as I said, it's a bit of a cyclical industry. And I think, yes, right now, obviously it's very difficult. But I think, we're past the worst of it, in my opinion, especially in terms of the companies that are involved. We're seeing the results start to improve. We're seeing, as I said, a big switch towards increased technification, increased use of more expensive technologies, increased awareness of improved agronomic practices. We're seeing, for example, less manual weeding in a lot of developing markets. We're seeing much more focus being placed on fungicides to try and boost yields so that not only, local food security is looked after, but also export demand can be satisfied as well. So I think, the fundamentals are in place, but I think, another difficult period probably to come. But, after that, I think we can go through an upcycle again. So I think, it's definitely a cyclical industry in terms of boom and bust.
Okay, great. Thank you. We've got one last question for David from the audience. Do you see China suppliers evolving to become R&D type of companies by developing new differentiated products?
Well, we really see some R&D patent molecules coming out from Chinese suppliers. But for them, the most of obstacles are how to have the global registrations. I mean, most of them want to cooperate with multinational companies, like CC Nantong cooperate with UPL and want to go globally to sell their patent insecticide. And we are seeing that some other companies like King AgriBusiness and like Cinda also have their patent active ingredients. But most of them, I think, it is facing very tough situations on how to promote globally. But I think maybe start from the partner with some Asian countries and small countries, and to test how to have the global operation. And I think the most efficient way that's like CC Nantong cooperate with UPL for global sales, and to have the cooperation with Cinda groups in China, and to have the local distributions.
It's interesting. I've heard, some of the people that I've talked to have said that China was doing a lot more research and development and coming out with new molecules, which is something that was kind of new. You're talking about the history. Is that something new that you're seeing, David? Is a new trend, or what was your?
Yeah, I think during the past 20 years, we do not see so much patent active ingredient coming from China. That's because Chinese need to make some money and then they can invest on the R&D side, and not like the Korea companies or Japanese companies. They have already got a lot of the cash flows, so that they can invest huge on new molecules discovery. But right now, Chinese also focus on this kind of area, want to find out more patent active ingredients. And we are seeing that the investment on patent active ingredients also increasing. And another trend that like Chinese institutions or universities cooperate with multinationals very deeply. Some companies just created their groups to work together with the Chinese R&D institutions to work together on novel products or novel technologies on crop protection. So I think this is also a new way that how to utilize the Chinese resources. not only to buy the products, but to cooperate with the Chinese scientists. We have very huge number of our scientists inside of China, major in chemistry and major in currently China agricultural universities also want to hire some people who have a background of AI, to on the new molecule discovery. So I think this a new trend, to investigate on the technology development from China side.
Great. All right. Well, we are out of time, and I appreciate David and Derek. I appreciate you giving us your time and discussion. I learned a lot from this discussion today, so thank you both very much. And thank you all for attending. And again, this is being recorded and will be available in about 2 weeks' time. So until then, I hope you all have a wonderful holiday season if that's what you're celebrating in your part of the world. And we'll be back next year.
Thank you. Thanks, everyone. Thank you. Thanks, Elaine.